a Broadway version.
This doesn't S&P equal weighted index. So why separate those two? Because if you take the equal weight versus the regular market cap weight in the market, that would be where I can see, that there are others that are with me that are supportive of that move. So when I can see what it is that we look at on a daily basis, we're going to show you how we look for trade setup. We're going to show you how we manage these things. We're going to show you how we decide whether or not to exit. Has now broken and gone up above that, then that shows you that some of the indecision that was around the move that we saw yesterday, the trading move that we saw yesterday, maybe some of that's dissipated and more people are actively getting into it. Okay, so that's an example where you get a breakout, potential a little bit of a pullback, and then like that. This means this is where the stock opened. It rallied throughout the day and closed at the high of the day. So this might be. And that is a way for you to generate income for stocks that you're willing to buy or stocks that you already own. And this is a really great strategy for an IRA account. Two reasons. It's traded basically between 140, pulled all the way back to $90, and it's slowly been kind of marching back up until $2.60. 140. So what's 140 minus 260?
Futures expire. Stocks don't expire, and I'm going to get into the implications of that in just a little bit. Inherent leverage. This is one of the most important characteristics of futures. The micro is 100 barrels, so $1 to your P&L, and so on and so forth. So all of these values are found in the contract specs that are available on our versus margin in the futures world. So margin in the equity world, by an SEC regulation they call Reg T, you're essentially required to put up 50% of the exposure that you have in a given security. So let's say instead of margin, because I think it more aptly describes exactly what it is. In futures, you essentially put up a small fraction of that notional exposure that you desire in the form of a performance bond, not a loan. So in the stock indices right now, it's around 6 or 7%. It's a little bit higher than when we did this slide because of the recent volatility that we've seen in the market. But you essentially put up about 6 or 7% of the notional exposure that you have, and that's not a loan. That's simply products that are physically delivered. And the big WTI crude oil contract, not the micro, but the standard size.
So Ben, hi Ray, what are you doing August the 8th? August the 8th, I'm going to be right back here at the Marriott Marquis.
With whom?
Yes, you,
Yeah.
Scott Durfee.
Yeah.
We're going to be
43 range, which was way out of their historical range. And so the fact that it moved off the 260 level wasn't shocking if you were looking at.
We hit all-time high, so that means there's a lot less uncertainty.
You say that every day, right? Because you're buying out of the money premium.
It's a real bifurcating type of name, but if you look at this chart here, it's tradable, and that's what Kevin and I always look for, things that we can trade that are still in the news, still in the headlines, and really liquid. I mean, that's another thing that maybe we should emphasize is we look at names.
in Midtown at Times Square at a beautiful property and spend this time with you as clients. And provide all of this education and all of these resources at no cost to you as clients. And the very simple reason, the very simple answer to that question is this: we like you. No, we really do. I mean that, and I don't mean to be flippant about that at all. And I love the fact that you laughed at that response. But what it really truly means is that we've discovered, we understand that you are here for a reason. There's a reason that brought you to this room today, and that reason is very likely similar for many of you. It's because you want to grow your portfolio. You want to build your legacy that you are going to leave to your kids, to your loved ones, to the community around you. And we want to help you do that. That's why we provide you with resources to to do that. The other secret that we figured out is that when you do that and you make money, so do we. Period, end of story. And we'll be completely honest about that. But what I want to say, the reason for us doing an event like this and providing these resources is because we are grateful and appreciative that you are our clients. So thank you very much for being Charles Schwab client and for being this way.
Thank you. Okay. Let's see if it is good. Thank you.